Okay, traders, welcome back to the channel. Here we have the GBP CAD chart in front of us, right? So the pound against the Canadian dollar, and this has been requested by somebody on the channel. So let's go. So what we have here is the weekly time frame. I've zoomed out all the way to the beginning of time, back since 2003. Again, this is a pair that I've not looked at, so it's very important to start on those higher time frames. So what we have over here is we have a structure, structural low, structural high, structural low. This is the last structural low. We had a structural high, followed by this break of structure over here. And so from here, we understand that once we've analyzed our structure, the next thing we want to be looking at is we want to be looking at our dealing range, our most recent dealing range. So what we have over here is we have a swing high just over here, and we have a swing low down here. So with this being said, once we've identified our swing high and our swing low, the next thing we want to be doing is we want to be using the Fibonacci tool to project the dealing range to show us our PD arrays, our premium and discount arrays from the swing high down to the swing low, right? These are my Fibonacci settings, so feel free to pause the video and look at this. So again, what we have over here is we have price action depicting very important information. So we had three POIs in the premium, okay? What makes this a premium is the fact that this is the 50% level or the EQ. And so because of that, anything above the EQ is a premium. So this here represents a premium in price. Okay, so what we've had over here is we've had a reaction of this initial premium POI. Price has hence gone down, broken structure, and now since then, what price is produced, should I say, what price is produced is it's produced a ton of buy-side liquidity in the form of this trend line over here, right? This trend line extends all the way back to April 2018. So 4 years ago, this trend line's been forming, right? So this is a large amount of buy-side liquidity, right? Trend line phantom or buy-side liquidity. And so from this, we understand that this is the next overall pool of liquidity, right? So my overall anticipation for GBP CAD is for higher prices up to at least this POI up here, in line with the overall IPTA characteristics. So quickly, if I quickly bring your attention to IPTA, the IPDA, the Interbank Price Delivery Algorithm, right? What does IPTA actually seek for? Well, IPTA seeks for two things, right? The first thing IPTA seeks for is PD arrays, right? Price moving from premium to discount and discount back up to premium. That's the first thing. IPTA will move from discount to premium. So right now we're in discount and IPTA will move to premium and then from premium back down to discount in line with the overall structure, which is bearish. So that's the first thing IPTA will seek. IPTA seeks to IPTA seeks to target PD arrays, right? Premium and discount arrays. The second thing IPTA will look for is fair value gaps in the market, right? FVGs. FVGs are very important, right? Fair value gaps, inefficiencies, right? So we have buy side liquidity and we have PD arrays. So the IPTA targets PD arrays and fair value gaps, right? Also targeting liquidity pools as well. So this is the three things that we need to have in mind. We have a very large liquidity pool over here and we have inefficiencies up here. So overall on the higher time frames, I do expect higher prices up to eventually this POI over here, this weekly POI, which lies at 1.988, right? 1.988. So now if we head down to the daily time frame, we can begin to dissect the inner structure in a little bit more detail. So again, we had that weekly break of structure to the left, right? So this long line over here represents a weekly break of structure. And from here, we've had our shift of structure, which was internal weekly structure or daily structure. So we've had a very clear chop and we've had a bullish break of structure. So we've had significant breaks of structure to the upside. So we understand we're overall bullish. And we're overall bullish in line with the overall weekly trend or the weekly narrative, should I say, which is to get up to that premium POI, which is all the way up here, 1.988. And so from here, we understand that we've broken structure now to the downside. Notice how we've had price give a low, high, low, high. And now this high is actually broken the last low, and we're now down here. So you have to ask yourself, what is the purpose of this break? Is this break to continue down to hell? Or is this break to do something else? We have to ask yourself. If we quickly use a premium and discount tool for this particular dealing range, so from this swing high down to this swing low, one thing we immediately need to understand is that we have no real inefficiencies at the moment over here. So we have no inefficiencies over here, no fair value gaps at all. No fair value gaps. And so what does that mean? The fact that we have no fair value gaps means price does not have any supply zones to react off. Very important to understand. We also have price giving us equal highs, which is a very strong indication for higher prices. This here is very clear equal highs in the market. These are equal highs. And so these equal highs represent liquidity in the market. Very important to understand. Equal highs represent liquidity in the market. So this is a strong indication for higher prices. So this is one reason why I think this market is going to head higher. So my anticipation for those wondering is that the GBP CAD is going to head higher. Another quick confluence to add to people's toolbox is that if we analyze the last dealing range before that, so we had a swing low down here and we had a swing high all the way up here, right? What we want to see is two things. We want to see that price barely came into a discount for this particular dealing range, right? So price came, touched the equilibrium and then headed higher. So this down move over here, when we study this aggressive down move, we want to ask ourselves, is this a break of structure to the downside? Well, yes, it is. Technically, it is a break of structure. But what is the purpose of this break of structure? You want to ask yourself, why is this break of structure significant? Is it to go to hell? Or is it simply to gather a more discounted price before continuing higher? Prices left, prices printed, prices engineered equal highs, which gives a strong reasoning to sweep this liquidity and simply head higher. Now, the second thing I want to draw to people's attention is the fact that we had a very clear POI down here in the discount for the last overall structural range. So we had a discount down here, and this discount left a fair value gap, left a POI, right? Left a daily order block, you can call it. This is our daily order block. And the simple reason for that is because it had broken structure. So we had seen a clear break of structure over here. So it had broken a previous high. That's the first thing. The second thing is it left a fair value gap over here. So this here was a fair value gap in price. And the third thing is that it's priced in the discount. So we have the last structural range. We have the equilibrium over here. So anything below that is a discount. And so these are the reasons why I expect higher prices on GBP CAD, right? We've mitigated the daily order block that follows all the rules of a break of structure, a fair value gap, and a discount. We have equal highs above us, which give a strong indication for higher prices. And we have a weekly POI all the way up at 1.988, which I also expect to be mitigated in the future. So these are the three reasons why I expect higher prices on this particular pair. So now if we go to the other pair of interest, I believe someone did ask me about this. This is Euro CAD, right? So this is the EURCAD, the Euro CAD. And so if we begin on the weekly time frame, the first thing I have to bring to people's attention is that overall, this particular market is bearish, right? So we understand we had a low over here. This low produced a high, and this is the all-time high and the all-time low. Again, this is the weekly time frame. It's important to understand this is the weekly time frame. And so how am I analyzing this particular market? Well, a few things jump out. We have equal highs over here. So this is a liquidity pool, equal highs, reason for higher prices. But the most important thing I want to bring to people's attention is the fact that once we have a structural high established and we have a structural low established, the, the Fibonacci tool gives us a premium and discount projection. So what we need to understand is that we're very close to the weekly equilibrium, right? We're very close to the weekly equilibrium. Hence why we have this range, this quite a difficult range to trade on the daily time frame as well, which we're going to discuss. And that's why I've marked it in red. So overall, on the EuroCAD, there's two potential things that can happen. Once we're at the equilibrium, we can either move up or we can either move down. And it's a low probability region. Very important to understand. It is a low probability region simply because it's at the weekly equilibrium. So from here, there's two things that can happen. We can either expand lower, gather a more discounted higher time frame price before heading higher, right? And the reason why I think that is because ultimately we do have buy side liquidity and a weekly POI, an inefficiency, a fair value gap all the way over here. So we have a weekly inefficiency, which also gives rise for higher prices, but I'm not quite sure when that's going to happen because we're at the weekly equilibrium. So now if we go down to the daily time frame, we can begin to dissect the structure in a bit more detail. So in the weekly discount, we had a clear shift of structure, right? So this is a very clear shift, high, low, high, low. We've had a break of structure to the upside over here, and we've had another break of structure to the upside. And so from here, we've had now a break of structure to the downside. And this is not surprising, right? This is a choppy market. Look at how choppy and consolidated all this market is, right? This is a very choppy market, so I'd recommend sticking to the first pair, the GBP CAD. Stay away from Euro CAD because we're at a weekly equilibrium and we're at a daily equilibrium. Again, this is the 50% level, and we're just hovering, and we've just been hovering near this level, right? Price is oscillating, right? You want to stay away from oscillating or ranging markets. And an easy way to establish that is simply by using structure the way that I have, understanding your dealing range. So your dealing range in this case projects from the swing high down to the swing low. We use the Fibonacci tool with the 50% level that gives rise to the equilibrium. And we can see what kind of a messy range we've been in for the last, I think since the start of this year, if I'm not mistaken, since the end of last year going into this year. This was all of this year's price action, very, very rangy. So from here, what's my overall narrative? Well, my narrative is to stay away from this pair, pick another pair that's better. But what we have over here is in the discount. So again, we have our equilibrium over here. So anything below the equilibrium is a discount. And so we have a POI marked over here. This is our daily POI. And so what makes this a daily POI? Well, it's the fact that we've broken the structure. It's in a discount and it's left a fair value gap. So we understand this is an area of interest. Price didn't quite get to it, price missed it, and so this is a valid area of interest. So any sells which I don't recommend taking would want to target this liquidity pool, sorry, this fair value gap over here, this daily fair value gap, right? Any buys would want to target this inefficiency. So notice how we're simply using the basic ICT concepts of premium and discount arrays, fair value gaps, structure and dealing ranges to understand how you can analyze this potential market. Again, not the easiest market to trade, not too hard to analyze, but quite a difficult market to trade simply because of the range and where we are in price, right? We are at fair value, we're at equilibrium, right? Based off our structure, we're at equilibrium. So from here, it's best just to leave this market alone, let it consolidate as much as it wants, let it manipulate, and we want to aim to catch a distribution, right? And our job is to simply use premium and discount arrays, fair value gaps, liquidity, and basic market structure to get involved in the markets, right? So again, quickly going back to the higher time for the higher quality pair, which is GBP CAD, right? This is GBP CAD. My overall analysis on GBP CAD is simply to take buys, right? I would only be looking to take buys in this particular market because we have equal highs just above us, right? Just above us, we have equal highs, and we have weekly POIs, and we have a ton of weekly liquidity to target, right? In the form of this trend line I discussed at the start. Massive trend line, likely to get eaten with equal highs. Let's see what the week begins. Let's see what the week brings, sorry. So good luck to everyone, and I look forward to seeing all of you in the next one.